The Prospectors and Developers Association of Canada, or PDAC, has been hosting its national convention since 1932 in Toronto, Ontario. PDAC 2023 is the world's premier mineral exploration and mining convention and is the leading event for people, companies, and organizations connected to mineral exploration. It was attended by close to 30,000 and featured more than 1,000 exhibitors and 2,500 investors. Mark Reichman, Noble Capital Markets Senior Research Analyst, was there. Throughout the day, he'll be discussing the convention. First, we'll get a brief C-suite description of the company. Then Mark will moderate a fireside chat. Enjoy the takeaway from PDAC 2023.
Hi there, I'm Rob Shewchuk, CEO of Lithium Bank. I'm pleased to be here today with Noble Capital. Lithium Bank was formed in 2019 at the bottom of the previous lithium cycle. Our four co-founders have over a century of combined experience in capital markets and the resource business. And we're financially backed by some of the most noteworthy titans of the resource industry. The founding premise of Lithium Bank was that the era of electrification would be a tipping point somewhere in the early 2020s, and that would cause a serious supply demand gap and a corresponding spike in the price of lithium, which you can see played out here on the screen. And that's something that conventional sources of lithium would not be able to make up for, was our theory. Our view is that, as you can see on the left here, the conventional sources of lithium being hard rocks and salars, versus the unconventional brines, which is what we work with at Lithium Bank, would kind of go through a transition that you'd seen similar, in the gold business or in the copper business with technologies such as SX-EW and heap leach, as well as the oil and gas business, as you see here in Alberta, with horizontal drilling and fracking. And that technology inevitably would be identified that we felt can unlock these brines. And we refer to that technology as direct lithium extraction, or DLE. The DLE process for our brines happens in steps 2 and 3, which you can see on the screen. All of these steps and processes are well established in the resource business. They're being used for decades, really. We're just tailoring and repurposing them for the purposes of lithium. What we could see, at that time was that there's a lot of people that were close to cracking the code on DLE's application for lithium. So we saw a couple of years of a window of opportunity to aggregate the largest confined Leduc reef structures in Western Canada to intersect with timing of commercially available DLE technology for lithium. And so we went to work. Fast forward to 2023, we have since acquired over 4 million acres of claims in Western Canada. For a sense of scale, that's larger than the state of Connecticut, or 3 times the size of Prince Edward Island, or all of the Crown land in Nova Scotia. Over the past 3 years, we have successfully carried out exploration across our entire portfolio and identified 3 distinct development districts to progress towards commercial production. The first of which is our current flagship district. We call it Boardwalk. It's over 500,000 acres in size, or it's about the size of the state of Rhode Island, and over 350 meters thick. You can stand the Eiffel Tower or the Chrysler Building up in it. We call it Boardwalk because it checks 5 critical boxes that make a direct brine asset a potential commercial lithium producer by 2026. The first of which is size. So in our view, it needs to be greater than 4 million tons for a starting point of at least 20,000 tons a year of LCE, and to be able to scale and produce for decades. Number 2 is grade. It's going to be greater than 70 milligrams, which is relative to E3's Clearwater PEA, which is a comparable of ours a bit further to the south in our province. 3 is deliverability. It's going to be greater than 3,000 cubic meters a day of potential brine production. 4 is infrastructure. So think about gas, water, power, roads, etc., and those types of things. 5 would be ease of permitting, which is gas, water, and environmental permits. We hired Hatch Engineering in 2022 to produce a PEA on Boardwalk, and have since produced and reported great DLE and hydrogeological results, which you can see from our filings. We're excited to release our PEA in the next 30 days. Our second district scale project, we refer to as Park Place. We recently revealed this asset after a 3-year acquisition strategy. That led us to controlling over 95% of the Fox Creek confined Leduc reef structure. We recently announced a hydrogeological study which showed 76.2 cubic kilometers of brine. That makes this the largest contiguous lithium-rich brine project by volume in North America. We have modeled all the wells in the area with historical samples, and they range sort of between 76 and 130. We recently reported taking a sample with Repsol at a well that we expected to come back around 76. You can see it on the screen there. It came back at 77, thus confirming our model. We think this bodes very well for our next set of samples, which are all at well locations previously sampled that were over 120 milligrams. Beyond potentially being higher grade, Park Place checks all the same boxes as Boardwalk, with the exception of having more oil and gas current operators in the area. It is going to benefit greatly from the PEA process of Boardwalk. We expect it to take a fraction of the time to produce a PEA at Park Place, and we expect that report in the second half of 2023. Our Saskatchewan district is our third district scale asset. We're the largest holder of Dupro claims. That's the same thing as the Leduc once you hit the Saskatchewan border. It's just referred to as the Dupro. And we hold 3 distinct projects there, as you can see on the map. And we expect to put a resource on all of these by the end of 2023, as well as a PEA on our Kindersley project, you can see up to the northwest. The combined valuations of our 3 neighboring companies that are contiguous with us in Saskatchewan, whom have limited sampling and no published PEAs, have market caps and sale values equal to more than $140 million. That's over 3 times our current market cap. Our expectation is that it won't remain the case by the end of the quarter, or at least by the end of the next 30 days post our PEA release on Boardwalk. In terms of comparables, I would draw your attention to the fact that 2 years ago, not one of our comparables that you can see here had a market cap greater than $50 million. And that's prior to them producing a PEA. So a PEA is a big deal in the brine space. E3 went from 30 cents a share to over $5 within a month of reporting theirs. A standard lithium went from less than 50 cents to over $15, and Lake from a 50 mil valuation to over $2 billion at one point last year. And as you can see from the comp table, by the end of 2023, we expect to have more resources reported and as many PEA projects reported as all of our direct comparable companies combined. This is a recent slide that we made. I think it's a great slide for people to understand what the steps and stages of development are for a lithium brine, especially for our entire peer group, really. And it shows the milestones, as you can see on the right side, which you can expect to see us carry out work over the coming year and start to move these projects up that value chain. And I think that you can expect to see a corresponding increase in market cap, relative to the successes of the stages of development that you see on the right. Cap table, we enjoy one of the best cap tables in the business at 38 million shares outstanding. Just half of that's owned by insiders and friends and family. We have $2 million in cash and no need for near-term funding. We're spending about $300,000 a month right now, producing 3 PEAs this year. And then management, Paul Matisik, as you can see, Paul on the left is our executive chairman. I've had the pleasure to report to Paul for some time now. Paul has sold more PEA projects to majors than anyone on the planet at 6 and counting. 2 of which were lithium assets, and to the tune of over $2 billion in shareholder value created to date.
NobleCon 19 at Florida Atlantic University. Located at the center of one of South Florida's most vibrant and fastest growing cities, Boca Raton offers an unparalleled cultural, recreational, educational, and business environment, the perfect setting for NobleCon 19. Now in its 19th year, NobleCon 2023 will be our biggest ever. We're inviting more companies, larger companies, and dramatically expanding the investor representation. And with the move to the FAU College of Business Executive Education, all new, state-of-the-art 50,000 square foot facility, NobleCon is the gold standard on the conference circuit. NobleCon 19 at FAU. It's time to invest in knowledge.
Hi, Rob. Thank you for joining us today.
Oh, great to be here. Thank you, Mark.
Rob, critical minerals, including lithium, received a lot of attention during the recent PDAC convention in Toronto. And Lithium Bank has acquired over 4 million acres of lithium claims and identified 3 district-scale projects. Would you talk about the role that timing played in assembling these claims, and could a package of this size and scale be replicated today?
Yeah, Mark, that's a great question. Timing oftentimes is everything, and we hit the timing of this, I think, perfectly. We had a stretch of down lithium prices for just over 2 years, and why that's significant in terms of its time frame is that at that time in Alberta, the government had spending requirements on a 2-year basis. And so every 2 years you had $5 a hectare that you had to spend on your properties, and it had to go into the ground. And that wasn't really fair. And they've since changed the regulatory regime there to better reflect the lithium business. So today it's $3.50 a year in expenditures, but it doesn't have to go into or it's actually in payments, but it doesn't have to go into the ground. And why that's significant in lithium is because in our case, we don't have to spend an egregious amount of money in order to put resources together, which is what you're always going to be doing in the early stages of your project. You're going to be defining resources. And the reason for that is because we could sample those resources relatively cheaply. So you could put a lot of sampling together and develop a resource for a couple $100,000. So begs the question, if you have 1 million hectares, where are you going to spend $5 million? Right. So that was one part of it. The second part of it was that because lithium prices were so depressed from when we started Lithium Bank 2019 through 2021, the capital markets were kind of closed to even conventional sources of lithium, never mind unconventional sources. So companies had a really difficult time raising money, and a lot of the junior companies, became gold bugs overnight and sort of left the space. And so what happened was that when in doing so, and so either shifting focus and or not being able to spend the money and having to release the claims back to the Alberta government, it allowed for us as a company to sit there patiently for 2 or 3, basically 3 years, and pick up properties with zero competition. And it allowed us to put footprints together, like the footprint that you see from Lithium Bank, over 4 million acres, which is unheard of in terms of an inventory of development projects. And we took full advantage of that. We spent our money on seismic, trying to figure out where the biggest structures were, because we were after district scale opportunities, and we wanted to own 100% of those districts, which we practically achieved. So to answer the second part of your question, it'd be very difficult today, if not impossible, to put this portfolio together, not just because we were kind of the only people that were interested at the time and had the capacity previously, but also because recent shift to put lithium under the Alberta Energy Regulator in our province is such that going forward, everything will go to auction. So you can't stake claims anymore, right? So if it goes to auction, it's going to be open for everyone to silently bid. And it's going, in my opinion, it's going to bifurcate, opportunities, and it's going to make it such that no one will be able to put an entire district together. You'd be lucky to put a project together via auction, because I think there'll be battery companies, there'll be energy companies, and processing companies, et cetera, that are all going to vie for those types of land positions. So that's one part of it. The second part of it is the price of those of that land is now going to go a lot higher. Even recently in Saskatchewan, we see prices over $100 an acre. So relative to the size of our portfolio, that would make our portfolio worth $400 million just on an acreage basis.
Now, what is unique about the reservoirs that underpin your claims that make them well suited for lithium production?
Well, our Alberta claims are confined. So I think that's a critical piece. So that brine has been there for 420 million years and isn't going anywhere. And that also lends itself to the fact that, sort of explains why we see such consistent grades. And, grade control in mining is very, very important, as you would know, when you're trying to produce an asset. And so having these things be confined structures is a critical part of that.
I wanted to focus on that one slide in your presentation about the value creation timeline. And I wanted to ask you first about if you could just elaborate on the company's plan to commission a brine processing pilot plant, to produce a concentrated solution, and how much would that cost, and at what level of concentration is desired?
Yeah, that's something obviously that we're one of the things that differentiates Lithium Bank from a lot of other of our peers is that a lot of our peers have sort of had their own homegrown processing solutions, DLE solutions, and generally that was because they got going sooner than we did, and sort of back in the 2015 through 2017 period when they started. There were no DLE technologies, or there wasn't the plethora of DLE technologies from all over the world that were focusing on brines. Some companies were working in South America on sort of, that style of solar and brines there, but not the direct brines, that we work with today. So as a result, when we started working on this in 2019, we had a purview to there being a lot more people working very hard at this and very, very smart folks. And, our bet was that by 2023, those people were going to have significant success. And so we hired Hatch in order to, have a look at everybody out there and obviously Hatch Limited engineering firm. They work all over the world in all sorts of different styles of mining. So they've seen practically every process that's out there. So we started with that, and then we did a bunch of work in parallel on our own. And we reviewed over 15 different DLE companies and technologies. And we took our brine to at least a lab scale testing with 4 of them. Why that's important moving forward is because our view is that the best economics are going to be on the basis of a combination of technologies. We don't think any one company, holds the magic key. We're seeing a lot of different interesting things that are applicable. You're going to see that in trade-off studies and post our PEA. So our PEA will be more of a kind of based on one technology, but thereafter we expect to do a lot of trade-off studies and a lot more work to make continuous improvements as we flow that through. And obviously we're going to have a lot of learnings at the pilot scale, commercial, more of a commercial scale than obviously the lab scale. And in terms of cost, one of the benefits for us is, a lot of our peers are going into the field to the wellhead, and they're having to build a plant around their own processes. And of course, that takes time and effort and capital. And some of them having some successes getting that capital, some contribution from the government, which is great, but it still takes a long time. And the benefit we have is that the technologies that are currently in our top 3 list of technologies that we feel fundamentally work the best in terms of the economics of our project and are great matches for our brine in terms of temperature and chemistry and pH. those two of those particular companies already have pilot plants that are in the field today. We're just going to reposition to the wellhead, or at least reposition with respect to our assets, starting with Boardwalk and then moving from Boardwalk. Say, the plan would be to spend 3 or 4 months there. We'll set our KPIs, and once we meet those KPIs, hopefully be able to move it, the same plant from there to Park Place shortly thereafter. And that's how we talk about being able to do, more than one of these types of things in the calendar year 2023.
Well, and you are moving these projects in parallel. I think in your presentation, you've already kind of outlined what the near-term milestones are in terms of when the market can expect a PEA on each of those projects. But when you look at the finish line in terms of production, what's your expectation for Boardwalk, Park Place, and Kindersley?
Yeah, they're all different. The one that obviously we call Boardwalk our flagship for a particular reason. It's really not that like Park Place can be higher grade than Boardwalk. Could be 3 times the size. There might be an order of magnitude more projects in it, instead of two or 3, which we think Boardwalk can manage, maybe even 4. It could be 5, 6, 7 in Park Place. So it's a massive district. They are different in the sense that when we call them our flagship projects, Boardwalk will kind of always be Boardwalk for one particular reason. That's because Boardwalk has 550 previous wells producing in that confined structure, and a total of some total of 0 of them currently producing. There's one operator, and everything is shut in at Boardwalk. That's special because what that means is you can leverage, and they were only shut in recently, like 2 years ago. So the environmental stuff's up to date. There's a 16-inch gas line that you couldn't build prior to 2027. Right now, if you had to put that in for a new project. There's water in the area. We don't use a ton of fresh water, but it's fully available. As well as power. Obviously, power is a significant thing, and then all the rest of the infrastructure that goes along with that. So we believe that Boardwalk is something that could be a producer by 2026, because the permitting is just going to be that much easier, and there's no other oil and gas companies that you have to deal with. There's no carbon sequestration or carbon companies that are looking to do carbon disposal into this area. So it's a really clean in terms of permitting, and that's why we call it Boardwalk.
And then just lastly, you've already talked about kind of what you see as kind of the key elements for a successful project. And I was just wondering if you could just kind of recap those and highlight what sets Lithium Bank apart from other lithium DLE projects.
Yeah, obviously, direct brine projects are lower grade, and as I sort of talked through, that the DLE is what makes that takes that concentration and makes it competitive. A lot of people don't understand that, like even a conventional hard rock mine, what are they really doing? So ahead of doing all the same stuff at the back end to make a hydroxide or a carbonate, the polishing and the crystallization, all the stuff that goes on in the back end of the DLE plant. In the front end, they're mining, right? So they're creating a hole, you can see from the moon, in order to process all this hard rock material and ultimately turn it into a brine. And then they send the brine through the plant. So our front end isn't hard rock mining. Our front end is simply lifting the brine from the reservoir and then putting it through a front end process where we have to concentrate it up to compete with the concentrations that you would get out of hard rock mining it, or putting it in a solar, sticking it out in the field and having the sun do the work, right? So that's where the DLE piece comes in, and that's how we make this competitive. What we're trying to answer your question around grades, we're trying to lift this from 70 to 120 milligrams, depending on what project we're talking about, to an order of magnitude of 60 plus times. So, we take it to, 1% would be 10,000 milligrams as a starting point. And we see, technological innovation and the ability to combine technologies at an economic fashion to be able to get it closer to 3, 4, 5% over the coming years. And we think as we have success being able to move it to 3, 4, 5%, people are going to realize quite quickly that this is the most ESG friendly way to do this. And if we can attain a 3 or 4 or 5% post RO going into the back end of the plant, it is going to be very, very economically competitive and very difficult for people to imagine any other way to do this in the future.
It's been a real pleasure to have you join us today. Thank you so much, Rob.
Yeah, Mark, it's been great to be here.
With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple, then Channelchek truly is the orchard. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series lunches, and to be part of the preeminent annual Small and Micro-Cap Investor Conference, NobleCon. And here's the best news. Since Channelchek is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channelchek is North America's leading source of research on the companies that just may change the world.